Hello, my name is Hussein and I'm Forex Optimum broker financial analyst. I'm back again to bring you all new updates in the financial markets that are going to give you some overview how you can position yourself accordingly and what's happening within this week. Well, wedding week finally came to a major event of non-farm payrolls in the United States that will be released on Friday. However, investors are getting more and more thrilled, fearing that strong labor markets may push the Federal Reserve to announce tapering of its $120 billion bond purchase program. And its chairman, Jerome Powell, may indicate such intentions in his speech today. There are almost no doubts that this non-farm payroll report would present excellent figures. ADP has already reported 978,000 new jobs which were created in May. Our statistical modeling shows less optimistic result with new jobs figure between 650,000 and 929,000. Nevertheless, even these values are above official forecasts at 650,000. Investors may consider unemployment figure could be a little worse than expected at 6.0 to 6.1% versus 4.9% expected earlier. And that's it. It could overshadow excellent non-farm payrolls report. But such consideration may be misleading as natural rate of unemployment rose from 4.5 to 5.0% to 6% as a result of the pandemic relief payments. If this is true, then higher inflation in the United States perfectly fits in the cyclical economic model. In the end of a cyclical one, lack of labor force push salaries higher, winding off inflation. But if these considerations are true, then American economy is at the top of the economic cycle at this very moment, and the corona crisis was not the end of the cycle. So we should expect the end of the cycle soon with the classic bearish market, with the first phase in summer and the second phase with a sway decline in autumn and winter. Although it might be a pure assumption at the moment, the Federal Reserve may well understand the tricky present situation with the inflation continue to wind off. The only chance to avoid this is to pull the brakes now. Such scenario is not priced in at the moment. So strong non-farm payrolls data together with Mr. Powell indications of inflation pressure may sharply increase volatility. Even in this case, S&P 500 broad market index is not supposed to fall lower than 4,120 points. But the traders should be careful not to rush buying the dip if the index plunges by the end of the day. Oil market is also waiting for the non-farm payrolls report. Fears of monetary policy tightening curb crude prices. Nevertheless, Brent crude prices are still around $70.50 a barrel. So a basic scenario for the crude prices is an upside movement to $72.80 a barrel of Brent crude. Sell positions at this level could be very interesting to open. Gold prices plunged amid fear of a Fed monetary policy tightening and the rising Treasury's yield. US 10-year Treasury's yield rose about 1.63%, triggering a downside scenario for gold prices to dive to $1,800 per troy ounce. The greenback launched a counterattack. The Euro USD fell below 1.21850 support level with possible downside targets at 1.2050 and 1.1930. GBP USD returned to 1.4090 and may fall further to 1.40 and 1.390. Last but not the least, I'd like to talk about today is the USD JPY is heading to the nearest resistance level of 110.60, where it may actually reverse. However, considering potential of the greenback, it would be better to look for the next resistance level at 111.90 to open any sell positions or get the downside confirmation signal from the US stock market. Guys, thank you very much for listening. That's all for the day, and I'll see you guys next week. Have a great weekend ahead. Bye-bye.